Welcome to Tesla Daily. Here's the latest on Tesla. First up, despite price cuts in January, sales didn't really pick up. In other news, Joe Ward has been promoted to global sales head as the company sees some executive changes. And speaking of changes, Tesla has revealed pricing for the Semi just as production ramps up. However, they're facing a dip in brand loyalty thanks to increasing competition. On a different note, Tesla's full self-driving insurance program has launched in Oregon, and it looks like the executive turnover isn't stopping, with Raj Jegannathan also leaving the company. Lastly, Tesla has secured $165 million in incentives for the Semi in California. That's a quick look at what's happening with Tesla right now. Let's dive into some recent news about Tesla. First up, Tesla's price cuts in January didn't boost sales as expected. In fact, they saw a significant drop in electric vehicle deliveries. This is a bit worrying. It seems that just lowering prices isn't enough to spark demand in the competitive EV market. According to Kelley Blue Book, Tesla's average transaction price fell to about $52,600 in January, down from over $53,600 in December. And the overall EV market? It's down nearly 30% year over year. Even with Tesla leading the pack, holding about 60% of all EV sales in January, they're still feeling the pinch. The average price for EVs dropped to around $55,700, showing a broader trend of declining prices. But the lack of sales growth raises questions about how consumers really feel and whether Tesla's marketing is hitting the mark. Plus, EV incentives have decreased, now at just 12.4% of transaction prices, down from 18.3% in December. This could mean consumers are more price sensitive and might be looking at other options, especially with more automakers entering the scene. Tesla needs to tackle these demand issues and adapt to changing consumer preferences if they want to stay ahead. Next, Tesla has promoted Joe Ward to global sales head. This comes at a time when the company is facing challenges, especially in Europe. Ward has been with Tesla since 2010, and his experience could help stabilize things during this period of executive turnover and declining sales. Sales in Germany, for instance, have dropped by 48%. That's a big hit. With the recent departure of Raj Jegannathan, who led North American sales, there's a lot of uncertainty in Tesla's leadership. This revolving door raises concerns about the company's strategy and how well they can respond to market pressures. With automotive revenue making up about 70% of Tesla's total, strong sales leadership is essential for their financial health. As Tesla shifts focus to AI and robotics, there's a risk that their automotive division might get sidelined, which could hurt sales. So, while Joe Ward's appointment is a step in the right direction, Tesla has some bigger challenges to address. Now, let's talk about the Tesla Semi. The pricing for this long-awaited truck has been revealed. The long-range variant will cost $290,000. This is a significant jump from the initial estimate of $180,000 back in 2017. But it's still competitive compared to the average Class 8 electric truck, which runs about $435,000. This pricing could give Tesla an edge as the trucking industry looks for zero-emission solutions. Plus, they're set to receive around $165 million in California incentives, making the Semi even more appealing to fleet operators. With an efficiency rating of 1.7 kilowatt-hours per mile loaded, the Semi is looking good as production ramps up in Reno. If all goes well, this launch could really boost Tesla's revenue in the commercial sector. Moving on, Tesla is facing a decline in brand loyalty. It's dropped to 55.9%, which is a big change. Just a few years ago, loyalty was at 98%. Now, more Tesla owners are considering alternatives. This shift could be influenced by Elon Musk's political activities and the rise of competitive models from other manufacturers. The expiration of federal EV tax credits is also making consumers more cautious. As companies like BYD and Ford step up their game, Tesla's stronghold is being tested. This decline in loyalty could have long-term effects on Tesla's market share and pricing power. They need to figure out what's driving this shift and adapt their strategies to keep existing customers while attracting new ones. Next up, Tesla has launched an insurance program in Oregon that offers discounts for drivers using its full self-driving feature. This is part of a broader strategy to enhance the ownership experience and promote its autonomous technology. Eligible Tesla owners can get about 50% off their insurance costs for every mile driven using FSD. This is based on safety data showing that FSD miles are safer than manually driven ones. This could encourage more drivers to adopt the technology and help Tesla expand its market share. By integrating insurance with FSD usage, Tesla is setting a precedent that other automakers might follow. This move aligns with their mission to increase the value of their vehicles while addressing buyer concerns about insurance costs. Now let's touch on the recent executive turnover at Tesla. Raj Jegannathan has left after 13 years, adding to a pattern of instability in the company's leadership. This comes during a tough time, with Tesla facing its first annual revenue decline and stiff competition in the EV market. The exits of key executives like Troy Jones and Omid Afshar raise concerns about Tesla's strategic direction. Without experienced leadership, navigating these challenges could be tough. As Tesla shifts focus to AI and robotics, there's a risk that the automotive side might be neglected, which is critical for revenue.
Tesla really needs to stabilize its leadership to regain momentum in the competitive EV market.
Lastly, Tesla is set to receive $165 million in incentives from California for its semi-truck. This funding is crucial as they prepare to launch the Semi and aims to shake up the commercial trucking industry. The incentives will help cover some production costs and have already attracted interest from major logistics companies. With the Semi priced at $290,000, it's competitive against traditional diesel trucks and other electric options. As Tesla ramps up production in Nevada, this funding could significantly impact their revenue and presence in the electric trucking market. That's a wrap on the latest from Tesla. There's a lot happening, and it'll be interesting to see how they navigate these challenges moving forward. And that's a wrap for today's Tesla Daily Insights. Thanks for tuning in.
Just a reminder, this is for informational purposes only, not financial advice. Catch you in the next update.